Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey traders, checking in on the broader market. Don't fall asleep on Bitcoin in the cryptocurrency space. It's made a huge move and pretty much following the weekly time frame for SPY. And I increased my exposure recently in the cryptocurrency space because Bitcoin was doing the same thing on the weekly chart as SPY. SPY already went to the higher high. Bitcoin was lagging behind. And of course, the fact that gold was in blue sky breakout, that narrative only helps Bitcoin. So not saying enter now, but again, just another market that we can make money on, always jostling around to different markets. So looking at SPY, daily higher low is now set at 319.25. Anything under 327.23 is just a daily lower high. We have the Fed Wednesday, and I believe the Fed outlook is going to be what we're looking for in terms of reaction, their forward-looking statements. And then we have Thursday as the big tech day. Apple, Amazon, Google, and I believe Facebook got pushed back from Wednesday to Thursday. Double check me on that. Thursday is a big tech day for earnings. Wednesday is a big day for monetary policy going forward. Pretty much, if the bears are going to take over on this chart, we have to fail to break the high of the COVID bounce and drop down and break 319.25 this week. If that were to take place, we would zoom out. We would say, okay, that's a weekly bull break with no follow through. Let's now see if the bulls can form a weekly higher low compared to 296.74. That's a whole bunch of ifs. First things first, we would have to fail the high of the COVID bounce and then confirm a daily downtrend, breaking 319.25 support. IWM, bullish day today. Still in a daily uptrend as well. Resistance is 150.20. We had a little support level of 145.15. That level held basically just sideways, but sideways favoring bulls by still holding strong and not losing the daily higher low pattern. QQQ. So QQQ is an example of a daily bear break on Friday with no bear follow through. What does it mean when you confirm a downtrend and don't see any bear follow through? It means zoom out and look for a potential flag. Just like if you change the trend on a bounce and get no follow through, you zoom out and look for a bear flag. This is a potential bull flag on QQQ. Obviously, Thursday and how we see earnings react is going to have a very significant impact as to whether we're looking at the high, the all-time high of QQQ, or the low of consolidation and potentially further weekly consolidation. But there's a lot of individual names that have this same setup right now, and I just call them the high flyers because it's names like Amazon, Tesla, PTON, Shop, and just names that broke to a lower low, PTON less than others, but broke to a lower low, straight into a bounce. But what we're looking for in the short term is a daily lower high compared to the previous daily lower high. So looking at Amazon, we're looking for a lower high compared to 3,241. For Tesla, we're looking for a lower high compared to 1689. For QQQ, we're looking for a lower high compared to 268.41. So that's what I'm looking for in the short term, but I'm well aware that the weekly time frame is absolutely possibly weekly bull flags depending on the earnings reactions to come. XLV looking for a daily higher low, but today was just an inside bar, double top high of Friday, high of today. If 106.16 breaks, daily higher low is set at 104.43, and we then look back up to 107.53 to try and confirm continuation and to confirm a new all-time high. As of right now, healthy daily consolidation on XLV. XLF pulling back, still in a daily uptrend, but not seeing a whole lot of follow through. Keeping in mind, bigger picture, XLF most likely scenario is a weekly lower high compared to 26.83. So we are currently $1.50 above key weekly support, and we are currently $2.70 below resistance. We are closer to support than resistance, which means bears have some favor. And if we were to lose the daily higher lows from here, daily higher low is 23.75 at the moment. Bulls are hoping to form a new one here, but that would be a big red flag that our weekly lower high is potentially being set, which would mean monthly time frame on XLF, if the weekly downtrend were to confirm, monthly lower high is set, and we then look for a monthly high or low compared to the COVID dump low to try and then form. So again, that's looking forward at a lot of scenarios, but the first most important scenario is the daily uptrend must hold because the bulls are not satisfied with the size of the weekly bounce at this point. They want to at least make it to the midway point, and a 50% retracement on this bounce to get back to that midway point would be about, we're close, the mid 24s, so we are getting there. And one more leg up would go a long way for creating space on the weekly time frame for a weekly higher low to form when we top out, because that's a possible scenario as well. Higher the COVID bounce, higher low, didn't break resistance, but bounced enough to be looking for a higher low and continued tightening range. And I am watching the financial sector very closely for how this weekly chart develops. Biotech sector, bounce underway on the daily. Bears hoping for a head and shoulders, and bulls have to be cautious. If we form a daily lower high compared to 121, the all-time high, and then roll over and lose this support of 114, it will be a bigger picture head and shoulders, which means further weekly consolidation will then be coming. But for right now, bulls close strong today and patiently watching for that lower high to form. The VIX daily lower high is set at 2860, and we're looking back down at the double bottom, 2360, 2350. Bulls must hold those levels and break 2860 to shift momentum in their favor. And we got a very clear channel here where we've got supports, making sure not to leave anybody out, and resistances. Just a channel to be keeping an eye on. And you can see the way I drew these trend lines, no candle is closing below or above either of those lines. The dollar is in free fall still. The dollar daily RSI is at the lowest point that we've seen in 4 years right now. So if we see another red day tomorrow, we will be at the lowest point, not just matching the lowest point, but a new lowest point in 4 years. So we know when we bounce, we're just looking for a daily lower high. We know that this dollar weakness is helping gold, silver, Bitcoin bulls. And we're watching the 6-month time frame, as I keep highlighting. 88.25, most important level from here. Gold and silver, still in complete control for these bulls. Again, we will not see daily consolidation as long as the 4-hour, 12-period exponential support remains support. It is pretty much a requirement. That level must be lost to zoom out and look for a daily higher low to then form. So gold is in blue sky breakout. And again, that's part of the reason I increased Bitcoin exposure, is because that narrative of dollar weakness, gold strength, hedge, etc., can easily see those mainstream headlines of hype and FOMO spill over into Bitcoin and the cryptocurrency space. And it's a very different environment. Gold has gone up 15% in 6 weeks. Bitcoin just went up 15% in 3 days. So obviously, Bitcoin is the less liquid, very high risk, high reward name. And gold is the slow and steady name that the bulls are certainly not complaining about. But it's slow and steady compared to a lot of other names. The daily chart is in a big breakout. But percentage-wise, it's not a huge move. Silver, much bigger percentage-wise, much more impressive on its follow-through. And still in control. Up at the high of the move right now, 4-hour, same thing. As long, and we can see here, just the perfect grinding of that support. As long as that 4-hour, 12-period exponential holds, we will not see daily consolidation. Testing the high of 2460. From there, we look to 25 psychological. And again, don't forget bigger picture. And we can go to silver long-term chart here. Let's see how much price history we got. Not enough. So here we go. Let's go to the yearly chart. Every candle is 1 year. When I look at this chart, I say the most likely scenario is a lower high compared to $49. The double top here, or I should say the clear lower high, increases the chances, in my opinion, that a lower high is the most likely scenario. That being said, there's a ton of range here. We could top out at 25, we could top out at 35, but I personally am not looking for silver to give us all-time highs in the short term. So just be aware, bigger picture of this key resistance at $49.60 and $50. It's a very different scenario to be in blue sky breakout with no previous price resistance than it is to have a whole bunch of previous resistances still at play. So it all depends on what time frame is most important to you. For me, I'm pretty much watching the yearly charts at this point because that is the time frame for my metal positions. I'm looking decades out. If you are looking at the daily chart, you're watching the 4-hour, 12-period exponential support as your short-term visual guide. Miners, hourly uptrend remaining intact, big gap up open, consolidation on the gap up, but you can see the low of the day on GDX, 43.31. We held 43.36 and 43.45, so keeping these higher lows. If we break those support levels, we zoom out and we look for a daily higher low compared to 40.21. We had very brief bull flag consolidation last week. The metals did not see that consolidation. That was due to the S&P 500 weakness, but bulls not missing a beat with their continuation move. So miners and metals still having full control at this point with the 4-hour, 12-period exponential as our guide. Oil. So oil dropped this morning and then V-shaped recovery to a higher high. And I'm still watching these little higher lows, 38.77, 39.31, 39.97. And the bulls are hoping that 40.48 is the new higher low. Again, I'm not comfortable bullish oil right here just because this is a rising wedge. The rising wedge could break bullish, absolutely, but whenever I see a rising wedge, I get cautious. Because bull breaks with a lack of follow-through means, to me, bull exhaustion. And when I look at this monthly time frame, knowing that the most likely scenario is a monthly lower high compared to 61.44, again, same as silver, there's a ton of space for where that monthly lower high can form, but the daily chart just does not have me comfortable. I can't say the bears are proving anything. I can just say that I'm cautious bullish oil. Natural gas, daily consolidation. That chart's not right. Natural gas daily consolidation. So, to change the weekly trend bullish for the first time in a long time, we would have to break 1837. Keeping in mind, we have not changed the daily trend back to the bulls on this move. So what the bulls need to see is a daily higher low compared to 1574, and then a break of both 180 and 184 on the same move. That would change both the daily trend bullish on a break of 180 and then the weekly trend bullish on a break of 184 if we can see that kind of follow through. So if I want to be an aggressive natural gas bull, I'm looking to scale in a couple entries and put my stop under 574. I personally have no interest trading natural gas as I have sworn it off for 2020 and I'm sticking to my guns with that New Year's resolution. But it's something to keep an eye out for. And just like the metals, Bitcoin, 4-hour, 12-period exponential support on this daily breakout is our guide, where as long as that level holds, we're not going to see daily consolidation. And it's holding well so far. So that's what we got heading into tomorrow. And again, not expecting a whole lot until Wednesday, FOMC, Thursday, tech sector earnings, watching for our high flyer names to give us daily lower highs compared to previous resistance levels in the short term. And it's going to be an exciting Wednesday and Thursday. So do good things. I appreciate you watching, and we'll see you soon. Today's potato harvesting day. You can see all the plants have died off. These are some big weeds that I didn't care about because they weren't obstructing anything. So these are all the dead potato plants, and it's kind of like digging for buried treasure. So it's always a fairly fun task. The downside is I've done it before in a 400-foot long rose field, and you'll occasionally get a rotten one, and it's from the seed that you planted. It's still goo, and it's one of the most foul things you'll ever smell in your life, and you just get a big handful of it. It's great.
Let's speed it up here.
Just found the tunnel with a little vole. We'll leave him that. So that's probably the best haul yet from one plant. And you get all that, and to plant it, you take one of these potatoes and all the eyes that pop up on it start growing the actual plant, and you can just cut them into sections where you just need one section of an eye per whatever you plant. So this would probably be 2 different plants right here. So one of those, half of one of these, and that's what you get. Return on investment. Exponential. So that's our haul. I had already harvested 2 of the 8 plants. And we got 4 more plants in another bed. But that's a lot of potatoes. Gotta give some of those away.